Hello everyone and welcome to today's More Report on Wednesday the 3rd of August with me, Richard Perry, market analyst at Hanset Markets. We've got a fairly sort of muted to negative start on the European session. We've got equity markets all trading lower. It's interesting that the dollar has started to find a bit of strength, or I say strength, support really, after several days really of decline and selling pressure through the dollar ever since that FOMC decision. We've had a few data points out of the States which are also bit tepid, bit underwhelming, and sort of urging, sort of erring markets away from factoring in an FOMC rate hike. Subsequently, the dollar has weakened quite strongly actually in the last few days, but it's mildly supported today, and that's come through Treasury yields as well, which are sort of holding up again in the last sort of day or so. But this dollar is slightly sort of supported today, but nothing too significant. It'll be interesting to see if it is the beginning of a turnaround. It is PMI's day, whereby we'll have the across the world the announcement of the service sector PMIs. We've had the Eurozone data, which I will show you. Eurozone services PMIs very slightly better than expected here. Composites again very slightly better than expected, and that could produce a bit of support for the euro as this rebound on the dollar just sort of takes hold. But there could be a slight amount of support. We're going to look forward to the 9:30, the UK services PMI next data to be released. 47.4 was the announcement on the flash data, and this morning we have the final data to be released, which is at 9:30 and is expected to be in line with that data as well. So no real improvement in that from the flash reading. But that's at 9:30. Then the States this afternoon at 3 o'clock. We've got the ISM non-manufacturing PMI at 3 o'clock. 56.0 is the expectation there. Last month we had 56.5, so quite a strong beat on that compared to 53.3 was the poll. Today we're going to be expecting 56.0, so again that would be a strong reading had if we do achieve it, and it's sort of slight. That would be a sort of a trend of improvement really that we'd seen in the last few months in the ISM non-manufacturing data. Sorry, and also we've got the ADP employment, which I haven't got the chart of. Or have I? No, I haven't. ADP employment, which is expected to be 170,000 today, and that is at 115. Where is it? Here, 115. So basically in line with where we saw last month. And then this afternoon into the weekly crude oil stocks. Now, last week we had an inventory build of 1.67. Million barrels, and that was a surprise, and that hit the oil price quite strongly. This week we're back into inventory drawdown territory, or according to the forecasts anyway, 1.25, and this data does tend to have an impact on the market, so watch out for that at 3:30. Obviously the oil price has been under pressure in recent days and weeks, and it is a market that continues to decline, as we can see here, but generally speaking that inventory report does tend to produce a bit of volatility, and you could see that this afternoon. So that takes me on to my chart of the day, which is Euro Yen. Now we saw the Japanese government introducing a huge stimulus package yesterday, 28 trillion yen's worth of fiscal package, but yet the market took it as an underwhelming move, with only about half of that being anywhere near sort of new spending or new measures really. 7.5 of fiscal spending and 6 million of loans, 6 trillion of new loans on the yen. So market took a bit disappointing really, and it's continued to fall away, and Euro Yen has broken back down again. We've got this pivot line on Euro Yen, interestingly. Pivot line comes in around 1480, which was these highs back from here, back from late June, initial reaction high to following on from the rebound after Brexit, and that has become a pivot. Actually provided a bit of a support low. Again, support low, and yesterday it provided the basis of resistance. So having broken it on Friday, it's subsequently been the basis of resistance again, a couple of days in a row where 1480 has been the ceiling before selling off yesterday. And I think this basically looks on the technicals as though it's a traction to the downside. Look at these momentum indicators. That RSI confirms the move to the downside. The MACD lines have crossed negatively underneath neutral. That's never good. And the stochastics also still falling away. This all sort of points towards selling into strength and a likely retest of that sort of 111 area, support area that we saw in early July. 110.80 is that support. But certainly looking at the hourly chart, we've got all the configuration of negativity really. All the moving averages falling. The momentum indicators on the hourly, every time the RSI gets anywhere sort of 50, 60, it gets sold off. Anytime the MACD lines get towards neutral, sold off, and the stochastics are falling away as well. Pretty much selling into strength is the way to play this. So you'd look at this, you've got the sort of 1480 to 1532 is a resistance band. Again, old supports are becoming new resistance, but or you would argue on a nearer term basis, you've got a sort of pivot line around 1380. So 1380, sort of 1385 area up towards 1480. That's a pretty good sell zone, I'd say, on euro yen, and I think that would be an opportunity if you did see it today for further moves back towards that a test of that 110.80 level, which I think will be tested in due course. So I wish you good luck in your trading on euro yen today, and I will speak to you later. Thank you.